Good morning, everyone, and welcome to this morning's European briefing. My name's Richard, and you're all very, very welcome indeed. So in this 20-minute live European briefing, we'll be having a look at the potential opportunities which will exist. We'll explain a little bit about what's going on. We'll have a look at the news, and we'll see how we can take an in-depth look at the trading day ahead. So just before we begin, if we can just make sure that we've familiarized yourselves with the risks involved in trading the financial markets. So please do take a very, very brief moment to review our disclaimer, and I shall just about explain in a little bit more detail what you can expect over the course of this European briefing. Okay, so just a few pieces of housekeeping then before we can begin. Please do feel free to ask any questions you might have throughout. You can just locate your chat box on the right-hand side of your screen, and feel free to post any questions at any point. You can locate your chat box on the right-hand side. For our members, this live webinar is being recorded and will be made available in your members area once the webinar has concluded. And of course, we'll have our normal Q&A session at the end of this live webinar. Okay, so what will we cover? We will start by reviewing previous price action, and we'll look at daily timeframes for this. And what that will do is give us a little bit of more of an overview. It is really good to have an understanding in terms of what is going on the larger timeframes. So we'll have a look through the daily timeframes first. What that will allow us to do is to develop an initial trade plan. It will help us with trade selection. It will be able for us to, when it comes to identifying opportunities, to have a bit of a clearer picture in our own minds in terms of what we would like to do for the trading day ahead. Then it's important that once you identify trades, you want to see if there's any major market moving news that can impact those trade decisions. And then as a result, you'll be able to finalize that particular trade plan for the day ahead. And we'll delve into the 15-minute timeframes to look for those opportunities and see how we try to navigate those our particular trade plan. Okay, so that's just a brief introduction. So let's begin with reviewing previous price action. So for this, we shall get up our trading screen. So we'll start, as we always do, with the dollar index. So from a technical perspective, it must be acknowledged with this market that since towards the end of January, we have literally been in this sideways moving price action. And actually that as a market condition, it prevails, as you can currently see on screen. We are interested in there's range bound opportunities obviously within these two levels, but in terms of this moving market, we're looking for a break above the 90.88 to potentially capitalize on a pretty significant move to the upside and also to the downside below the 88.15 level. Because when you get sideways moving markets, you always get the potential for nice explosive moves outside of consolidation. So that's why we're looking at those two particular areas. And in the meantime, we are in this range bound pattern. But as you can see, we are currently literally in the middle of these two major levels of support and resistance. So for us, for the time being, we kind of have to exercise a little bit of caution with regards to the dollar index. So that's just a very brief overview looking at the daily timeframes. So we will take that information across the majors, where we look at the other pairs that are, the other currencies that are paired with the US dollar. And again, you can actually absolutely see the same situation, except the high in the euro dollar is the 25.53 and the low is the 21.56, and we're smack bang in the middle of it. So that just means we're equally as exposed to the upside as we are to the downside. And under those sorts of conditions, maybe a bit of patience is required at this time. So moving on to the pound dollar, I suppose it must be noted as well, with the coordinated attacks on Syria on behalf of the US, the UK and France. the fallout of that we'll obviously experience today and over the coming few days. So it does remain to be seen how the markets will actually react to what has happened over the weekend with all of the political tensions that go with it. So we must sort of bear that in mind in the back of our mind, especially when we start looking at the equities. But certainly it has the potential to impact the dollar quite considerably. And as you can see, there's very little response in the euro dollar, excuse me. You're slightly more bullish against the dollar in the British pound. But as you can see with the British pound, we do have this level of resistance up here at the 43.44, and it looks like we're edging towards it, but we're interested to see how price action behaves around this level. Okay, so moving on to the dollar yen. So we're in this fairly recent period of consolidation. Prices, as you can see, moving sideways, one day up, one day down, and it seems to be that seems to be the pattern fairly recently. We did get a nice break for the majority of the day on Friday, breaking above the 107.50 level, and you can see today's price action pushed a little bit higher initially and then has rolled over a little bit. So what that means is we can see that the open is below the 107.50. Last Friday's close is below that level as well. So it just means that we're likely to experience a little bit more consolidation in this market. Dollar CAD. This is an interesting market. We've had this from a technical perspective. We've had this head and shoulders pattern be breached over a week and a half ago. So we had a high in this market, creating a kind of a head and shoulders pattern, and then we had this really nice break to the downside. But we want to draw our attention to these lows down here, and I want to show you from a technical perspective. If we just put a level of support and resistance in there, we can look across the market and we can identify areas where price reacts and behaves behaves off that level. So we're roughly talking about the 1.2575 area, but let's apply, let's very, very roughly apply a fib level as well. And this is where sort of technical indicators can play a role. They can help you reinforce your, they can really help you reinforce and give you more confidence in any potential trade ideas you have. So it coincides quite nicely with the 61.8%. So we've had this retracement from the highs of roughly 31.26. The market has bounced back fairly seamlessly back to the 125.75, and this may be the potential for a little bit of a push higher in this market. However, we do have our eyes on the dollar index, and we do understand what's going on with other markets. It's by no means is the US dollar in a position of any real strength in any capacity at the moment. So we do sort of go into this trade with our eyes open, let's say, but potentially a potential trade could exist above these daily highs. So this is one of the markets we're going to suggest certainly to keep a very close eye on. The Aussie dollar next, we can see that's quite choppy price action. We're running into these levels of support and resistance around the 78.03 levels. So we're currently below those levels. So we just want to apply a little bit of caution with that market. This is another suggested market to have a look at. We can see that this market is looking like it's going to roll over to the downside. So it's a trade that certainly could be viable on an intraday basis. And again, we are watching very closely the US dollar. So what we're seeing here is a potential roll below kind of these daily lows. And if we get an opportunity, we might look to sell it. To sell this market. So this is the second potential trade that we'll be monitoring for the day. Regarding moving on to the euro pound, you can see this market exploded to the downside last Thursday. Nice explosive move. The only issues with regards to the pound and the euro is obviously the Brexit negotiations and the impact that can have on the respective currencies. So the pound has been strengthening off these highs since March over the last month, as you can see, and it's looking like it's going to continue lower. There is a number of question marks really over this trade to the downside, especially with the UK's involvement in Syria now as well. So just a little bit of caution is probably preferred. However, we're going to loosely put it on our watch list for the day and see how price behaves and see how price reacts in this market. But just to be clear, on a technical basis, we are looking to sell this market below the 86.91 level. So, but it just has some tailwinds that we do need to consider. The euro yen, we're running into these levels of resistance, preventing prices from pushing higher. We do have now a structural failure to the upside, and we do have the potential for more upside here in the euro yen. I'm just showing you where this market has come from. So you kind of want to look for opportunities to go with the market, and certainly a buy trade would be doing that, especially with the structural failure we saw last week. But as you can see, price is just procrastinating and just consolidating a little bit around this level. So we'll just watch this one closely. So moving on to the global equities, we can see on screen that it's very, very messy. There's a certain amount of fear and anxiety about some of these markets, depending on where you acquire your news. So the S&P it is, on Friday's candlestick, did squeeze up to our level of resistance at the 2680 level, and as you can see, has just bounced off that. It was fascinating and interesting to see how these global indices would react to the bombing of Syria, and as you can see, it's had a mildly negative impact. What was interesting was the open price. So if we just see the open price of just bottom left hand corner there of the screen at 2673 level, and the close of the previous day, if I just bring this up just a fraction for you. So the close of the previous day was 2656, and we had some bombing in Syria and the potential unknown consequences that may yield. Then the markets subsequently opened actually higher at the 2673 level. So that's very interesting in its own right, but as you can see, we've had a bit of a rollover to the downside as a result. So that's the S&P. So really, I suppose for those that trade consolidation or range bound opportunities, that may exist, but to be fair, there's going to be a number of developments maybe over the course of the day and the coming days, certainly in some of these global indices. So maybe the more considered approach would be to just apply a little bit of patience in some of these global markets. The Dow Jones 30, we can see prices are bouncing off these highs. Similar situation to the S&P 500. For now, it looks like we're going to get a little squeeze lower, but nothing surprises us about markets at the moment, where you can go to war effectively, and the global indices will actually look like they're going to open higher if nothing else. So we'll just apply a little bit of patience really at the moment. Same with the Nasdaq. Opened higher, pushed a bit higher, and then has now rolled over to the downside. Same again with the FTSE. We do have this sort of 5-day period of consolidation, so we kind of want to see how this market certainly reacts to the developments on a global stage. So again, that little bit of patience is required. Again, regarding European indices, the DAX, the German 30. So same situation applies across the indices, certainly over the course of the day today. So moving on to the gold market, it's a similar situation to the S&P. Sorry, not the S&P. The dollar index and also the euro dollar. So we're currently in the middle of two levels of support resistance. it's going to be interesting to see what happens to price action. It pushed higher initially with all the uncertainty, and now the sort of certainly news outlets seem to be sort of playing down the impact of the strikes on Syria over the weekend. So therefore, we've now experienced and we've seen this little bit of sell-off, and actually that might contribute to a little bit more selling off in the gold market. But just one to watch for now. And just last market, really, the US or the crude oil market. We did have a break in this market towards the latter part of last week, and as you can see, that has reversed a little bit. We do have this ascending channel, so we are bullish the US oil markets as a result, and it's just looking for those opportunities to capitalize on taking this market higher. Okay, so that's just a little bit of an overview of the news of the daily timeframes. So what we'll do now is we've identified an initial trade plan as well. So we're potentially looking to buy the dollar CAD, we're potentially looking to sell the New Zealand dollar, and we will just be keeping an eye on the euro pound. So let's have a very, very quick look at potential market moving news. So we get up Forex Factory. And the major news for the day, as you can see on screen, which is highlighted by the impact, you can see the red factories on screen, which would be core retail sales figures. And as you can see, they're quite erratic month by month. And the basic principle to take away is that if you are trading the US dollar and we do get positive numbers, it's likely to support the dollar. And if we get, because the expected numbers are supposed to be certainly an improvement on the previous figures, especially the retail sales, and this is a monthly figure as well, so that must be taken into account. It's not going to shake the markets by any stretch, but a positive number would be positive for the US dollar, and a negative number would, as a result, be a negative. So looking through the rest of the market moving news, not an awful lot of news developments that can impact markets to any great extent. It's always worth keeping an eye on our FOMC members due to speak about the economy at a talk in Alabama. So yeah, has the potential, but you would imagine they'd be very well rehearsed in terms of what they say and how they say it. And for those of you that are perhaps involved in the Aussie dollar as well, just be aware that there's monetary policy meeting minutes being released in the early hours of tomorrow morning. So that's the potential to impact the Aussie dollar. Okay, so that's a very, very brief overview. Nothing of any major, just the 1:30 news release regarding core retail sales. Okay, so all that's left for us to do now is to delve a little bit deeper into the trades in which we're looking to include into our trade plan for the day. So the first one is the dollar CAD. So as we've said, we're potentially looking for a little bit of a bounce off this level of support of 125.75, and we have these daily highs sitting in here as well, the highs of the 26.23. I think they all match up quite nicely, 26.21, and today's high as well is 26.23 effectively. So you can see this price action is just sort of stacking up hopefully quite nicely. Let's have a look at the 15-minute time frames. So so this is what we're looking at. We had a bit of a roll to the downside. We had a couple of failures and reluctancy to break these lows. So that's now a higher low, and it's just these levels in here that we're really quite interested in. So what I'll do is let me take away this, and I'll put a line in there. So on a 15-minute price chart, we are looking for potentially a breakout above the 26.23 level. So that's when we get a confirmed break above that level. We might be looking to see if we can get a little push to the upside in that market. So it's quite a straightforward one, obviously with a strong emphasis on risk management in every trade we take. But for all intents and purposes, a buy above the 26.23, if you get the confirmation that we'd be looking for, could constitute potentially a good trade there in the dollar CAD. So, and the second trade from our trade plan is our New Zealand dollar trade. So again, this is just almost the mirror image of the dollar CAD. So let's have a look at it on the 15-minute time frame. So it's these levels here after a fairly significant pullback and a considerable amount of consolidation since roughly the 10th of April. So what we'll do is we'll mark that same kind of level. We'll see how price behaves and interacts around that level. So we did get a break lower, and as you can see, we've had a little bit of a pullback. So so now we need to apply a little bit of patience, just to be patient and wait for that potential opportunity to see if we can get a nice push lower. And as you can see, there is significant scope to the downside. However, it must be noted that we will be watching the dollar index very, very closely for support, because we are getting contradicting information as well regarding the dollar. So it's stronger against some currencies, it's weaker against others. And what you like to do with currency when you trade currency is effectively identify strength and trade it against weakness. And that's really kind of not the current market conditions, because they're just overly choppy for the time being. So that is the New Zealand dollar. And just finally, and this is more on a watch list than an actual tradable market today. So let's have a look at it on the 15-minute time frame. So you can see that we are sort of looking like we're wanting to push lower. We do make these lower lows, and each time you get a little bit of pullback. Now the pullback recently, literally over the last hour, is a little bit more positive for the euro. So really, probably this is one of these trades that, yes, we can watch it, but maybe we exercise a little bit of caution, especially over the course of the day as well, and see what develops in this market. So in actual fact, we'll work with the dollar CAD, the New Zealand dollar for opportunities, and we'll just put this particular market on the watch list. Okay, so that just about concludes this European briefing. Best of luck for the trading conditions over the course of the day. Please be mindful of the backdrop. We might be in for a little bit of a volatile day, or a non-reactive day. It could be effectively one or the other. So with that in mind, obviously be safe. Make sure you manage your risk effectively at all times, and we'll see what opportunities may arise over the course of the trading day. So from everyone here at Forex Academy, take care and bye for now.